Hello everyone, since you're watching this video, I assume that you have completed your practice and would like to see how I did it so that you can make a comparison, see if there's anything that you can improve upon and learn from in that process. So to do this, I set up a spreadsheet to do my calculations and work, but I've copied what the problem was, at least to start with. Not all the steps, but also all the starting information from the Stockholders Equity section of the balance sheet for our company here. So when I've also calculated our outstanding shares, which is the number of shares issued minus the number of shares in the treasury stock. That's what's going to start, because this is what we ended up with and for last year. So that's what we're going to have as our outstanding shares. We actually only need that for a couple of the last transactions, but we're going to keep track of our outstanding shares as we go along. Debt securities, we're going to, or the valuation, we had an increase in our debt securities, an unrealized gain. So we're going to have an increase there, a debit to the debt securities or a valuation allowance, however you're doing your accounting on that. And that's going to also increase our AOCI, or accumulated other comprehensive income. Now the net income, which was given, is typically not a journal entry, but of course would increase retained earnings. Now if you made it as a journal entry, that's not a big deal, but typically is not, because it's a calculation, right? But it is updated to retained earnings. Our purchase of treasury stock, $100 million it is, because everything's in thousands, but however you want to think about it, 100,000 credit cash both times. I put them right together so you can just see that, even though they're technically out of order. Because the price was different each time, we bought a different number of shares, even though we spent exactly the same amount. And that's often what a company will do, is they will allocate a certain amount to buy back the shares, and then whatever the price is how many shares they end up buying. Other times they will determine that they're going to buy a certain number of shares, and it doesn't matter, or they're going to pay whatever the price is. But in this case, it was a set amount and different number of shares. Now on July 1st, we sold some of these treasury stock to of those who exercised their options. Okay, and so the amount is $10 for 20,000 shares was how much cash we received. We originally purchased at $8. We always credit treasury stock for the amount that we originally paid for the shares when we sell treasury stock. And the difference goes to additional contributed capital, additional paid-in capital, whatever the term is that the company's using. That makes our shares go down by 20,000 and outstanding. Then in October sometime, and it doesn't matter the day, we earn compensation expense. Now what happened is we had 10,000 shares. The value per share is $23.50. Those are going to be earned over 3 years, so each year is 1/3 of that. So we just divide by 3, and when we have that kind of compensation provided by either stock options or restricted stock, we're going to debit compensation expense and credit additional contributed capital. That's going to make our shares outstanding go up by, it was 10,000, right? And 1/3 of them were earned, so divide by 3, okay? Round off. 3,333 shares. So why did we need that, the number of shares? Because we needed to know how many shares were outstanding. So we started with 166, okay? Minus, add, and we get 178,521 shares outstanding when we do our stock split. But it's also done as a stock dividend. If it was truly a stock split, there would be no journal entry. Well, because it's a stock dividend, we're going to do the number of shares times the par value. So we get our number of shares here, and if we're just going to give them the same amount of shares they already have, that means we're just going to double. We're going to take that, we multiply by 0.01, that's 1 cent per share, right, for the par value. All right, and that's going to give us 1785. When we do a stock dividend like that, we debit retained earnings and credit common stock for the par value of the new shares. So our new shares is literally the 178,521 doubled, right? So 357,042, just like it would be a stock split. Okay, we got twice as many shares, and we need that because we're going to calculate the dividend as a debit to retained earnings and a credit to cash for 40 cents. We're just going to simply take those number of shares times the 45 cents, 40 cents I should say, and get 142,817. So that's going to make our statement of changes in stockholders' equity for the 2021 look kind of like this. So preferred stock with zeros, not going to spend a lot of time on that. Okay, common stock, additional contributed capital, AOCI, retained earnings, treasury stock, all come from the numbers from the last year. We're going to add in our net income. We're going to add in the unrealized gain. We're going to subtract our purchases of treasury stock. We're going to show the change in treasury stock and additional contributed capital for the exercise of stock options. Notice we're putting a very brief kind of description down this side, combining if there was purchase of treasury stock, we just combine the two in one, but you could easily put two of them if you wanted to. Okay, stock compensation changes additional contributed capital as it shows in our journal entry. Stock split changes common stock and retained earnings. Retained earnings goes down, common stock goes up. And then we put our dividends in as a negative. We get our new balances after those changes. Those new balances then go on the balance sheet, and we make this look pretty much like it started, right? And put the thing, I skipped preferred stock in there, would be just the same exact thing, nothing changed. Common stock, we have still 0.01 par. Actually, it would have, with the stock split, the par would have actually gone even further down. So, but we'll pretend that there's no way to measure that. It's so small already. Okay, so the number of shares issued now is what we had plus these new shares. None of these, okay, were issued shares because they all affected treasury stock, not new shares. These were old shares we bought. Just the stock split or stock dividend made the number of issued shares go up, so we just add that in. So your number of shares issued would be this total, which is 4281, right? And because that number times the 0.01 should equal our amount on the balance sheet. Contributed capital comes right from here, 27, AOCI, exactly. Retained earnings just pulls down here, treasury stock down here. We do mention how many shares at cost. We started with 82,573. We bought back twice and sold some, because when we're talking about treasury shares, we bought more, it makes them go up, and when we sell them, it makes it go down. When we're talking about outstanding shares, when we buy them, it makes it goes down, and when we sell them, it makes it go up. Okay, so remember that differential. And then our total stockholders' equity on the balance sheet would be disclosed here. So that would be how it should work through the whole process and practice there.